Hey guys, Mike here. So another loaded video for you to wrap up the week as we head into tomorrow. And again, we do got big data coming out tomorrow morning. We'll see how that goes. Before I forget about it though, please put your questions in the comments tomorrow for Saturday's video. Ticker symbols, stock market questions, whatever. It really doesn't matter to me. I get into all of them for you. So thank you for that. Don't know if you just saw what Jack Dorsey just said and Square said, but that right there is the snapshot of what we've been talking about in almost all the Saturday videos going back for weeks now, and they worded it perfectly. And you're going to see it just continue to be like a big snowball. It's going to get bigger and bigger and bigger, and these companies will be rewarded for it, and that's the way it is. We'll get into Nvidia. Obviously, they reported. Blows my mind, I'll admit it, that the fact we're still stuck in this range in the S&P. I mean, it's mind-boggling to me that nothing seems to bust us out of this range. Again, I told you, I don't care which way we go, up, down. Let's just pick a lane, right? You know. But and we'll get into a bunch of stocks, by the way, which is like double bottom or double triple central going on here. And one price target you always got to know on these high beta stocks. One area. Okay, it's very important. You'll see. I'll show you a couple of them. I can point out way more than this. But again, I'll try to keep the video as short as possible. So let's get into what Square just said. I call them Square. I know it's Block. I can't get over that. But they just said they're going to be cutting nearly half their workforce as technology replaces jobs. This is this snowball. It's going to keep getting bigger and bigger, okay? So Block says cutting nearly half its employees, with the company citing new technology providing the ability to supercharge development with fewer workers. They're going to go from 10,000 to 6,000 roughly. A significantly smaller team using the tools we're building can do more and do it better. Dorsey wrote in a shareholder letter. And intelligence tool capabilities are compounding faster every week. And of course, they get rewarded. Absolutely. Up 21% in after hours. And again, when you look at this chart, you know, the numbers weren't bad either. I mean, God knows they don't do anything. Look at this chart. I mean, ugh, my goodness. Boy, look at that. Since 2022. Been in the same range. Even that big boost, you still aren't up to the white line, which is around 72, I believe it is. But yeah, I mean, I guess you can just mark this out and just swing trade the heck out of it. We'll see if it starts to go back up, starts breaking out of this range. But I mean, this is a fun one when you look at stage 1, stage 2, stage 3, stage 4, right? I mean, it's definitely one of those ones. But it's been in that range a long time. And so that's kind of goes back to what that, you know, letter, some people call it a fear-mongering brief or whatever was put out, I showed you, where they talk about this, where companies are going to start just cutting because of technology. Their share prices are going to go up. That's the way it works because we're a liability. We're the biggest expense. And they're going to keep going up. And people are going to say, they can't do it, though, because they won't have any customers. They don't care. That is not their job. The number one job, of a publicly traded company is their shareholders. And what do they do with shareholders? Stock price goes up. Who's the biggest and largest shareholder of most of these companies? The founder and the executives. And if it's the executives who aren't the founders, they ain't going to be around in 5 or 10 years. You know why? Because they're going to be multi-millionaires. They don't need to work. Okay? They don't care about that. That is supposed to be, unquote, the government's job to try to handle that kind of stuff, even though they won't do it either. Past behavior is future behavior, folks. I remember it. I swear. I've studied about this in business school. You look past, again, what white collar is going to go through, blue collar's already been through, right, folks? If you're a blue collar worker, especially if you're older, you remember these days where the factories were just loaded with people, and here comes automation. And then, more importantly, what's the government do? Sells all the American workers out to send what? All the jobs to China and these other countries, right? And then what do? We're going to pass these bills for re-educating the workers. I don't know if you're one of these people. I remember this, though. My uncle's one of them. And what you need to do is start studying. I don't know if it was coding at that time or something else. And then also, you know, the help desk folks that we're going to be getting the phone calls to help you. And then what they do, they went and got their retraining and got those jobs. And then those jobs got shipped over to India and then South Korea and Vietnam. So, you know, this is going to be no different. There will be no guardrails. You will get no help. I hate to say that, but that's just past behavior predicts future behavior, right? What is the government now? More bought off than it's ever been bought off. I mean, these guys, you might as well call the government, the federal government, a publicly traded company itself. So, you know, we've already seen Amazon make those announcements about jobs. We'll continue to see. I mean, Oracle CEO, I think he was on there yesterday bragging about that kind of stuff. How he hadn't hired any more engineers and all this crazy mess. So, yeah, can't wait to see how that one goes for us. Let me know what you think about that one. Now, please hit the like and subscribe button, guys. Really appreciate it if you get anything out of this. That's the worst thing to ask for after I give that little rant. But anyway, looking at QQQ. Volume leaders here, I look at this every once in a while, but he put in here this cluster of signature prints green and late arrivals orange at 6/16/42 is the fourth largest one-day cluster since inception. All were transacted yesterday and reported today. In simpler terms, they sold the bleep out of yesterday's close, 4.6 billion and growing. We'll share the final tally, all that fun stuff. But if we kind of look at where that was, like that's pretty much it, like right there. So that was Wednesday at 3:30. And you saw, of course, the open, bam. So they sold it, dumped it. But again, and really, until proven otherwise, this is a liquidity grab. I told people in the Discord, I said, man, right before I open, I said, look at these RTH gaps, right? Big RTH gaps. You had this big, massive 4-hour imbalance down below. So we mitigated that, mitigated almost the entire imbalance down there as well, even though Qs weren't really leading the way today. It was all about the S&P. But again, trying to come up, trying to get through these imbalances is going to be key. If that's the case, if we do kind of come up tomorrow, getting through those is going to be key. And if we get rejected, you know exactly why we got rejected right there. Now, S&P, if you look at this one right here, you can see on the SPY, same thing. RTH gap, 4-hour imbalance, came down the golden pocket, nice retracement down, boom. So as of now, this is a liquidity grab to the downside. Okay, you see the big pop up by like 0.8%. Okay, and what happened was also during this, we lost what? We flipped into negative gamma, and when we did that, it was just a waterfall down. Okay, and then of course, got a couple rips back up. Then when we get below a negative gamma, they're selling the dips and buying the rips. Okay, and so we actually closed right around, I mean, the positive gamma level, but it'll change tomorrow. So we have to see where we're at. Again, when you're in positive gamma, you can get that grind up. We just grind up and grind up and grind up. And then you get all this crazy volatility below that. And what amazes me, though, is we're still sitting here in the middle of this range. So clearly on SPY, 685 is key. Okay, 685, 690. If we break 685, yeah, definitely not going to look good. If we can get above 690, turn into support. Okay, and what do you see on the S&P, on the SPX here? Kind of just wedging, right? I mean, amazing to see it after all the massive news we had, all the massive earnings, and it's just sitting here for months, stuck. And again, like I said, I don't care which way it breaks, just break. Just find a route and let's go with it, okay? Now, one thing I don't know, very simply, is if this is what's going to happen, okay? So during midterm years, this is what normally happens, and then it's all other years at the top. But you'll see, February, we already talked about, rough. March, April, sometimes what you see is you'll get a move back up to set a new high, and then either in April or May, it'll just drop off. And then we'll have to go into the election, you know, while the market's actually going down, it'll set a new low. Sometimes we'll just see, obviously. So I'm just pointing it out there if it happens. And you see the all others, it's not like that. But either way, February through May, definitely an interesting month to say the least. Now, double bottom central, right? So you still got silver playing out here. It's at that resistance level once again. Big suck up candle day. You see it dropped. So that was a good recovery. Still waiting to see if it gets through that. Palantir still got this double bottom. Still trying to plow through that trend line, heading to the next one if that's going to be the case. Roblox here. Another one. This is actually a double and triple bottom, I believe it is. No, it's just a double bottom. So I got some triple bottoms in here too. You can see this one. So what this tells you too is this level, right? Like 60-40. You don't want to lose that if you're a Roblox shareholder, okay? And you're looking for more upside. He's also give you the target, that kind of stuff as well. But here's the key. Why did it bounce there so hard twice? That's the IPO. See what the IPO was? Way over to the left, and then it bounced again. And then what happens when it falls below? It really falls. Okay, double digits is what it's going to go down if it breaks that level. So again, and in a lot of these, you're going to see these trend lines coming down. I got them marked out. When they break above those, hey, good to go, right? App. This one's a double and a triple bottom, by the way. This is a big mover. You see, I'm telling you, this thing will tear your face off to the upside and make you cry to the downside. It is a big, big mover, man. And so you got to be buckled up if you're in this thing for sure. And it wasn't, I mean, it was at an okay bounce point, but again, these give you the levels. Like, okay, where do I not want app to break if I'm a bull? There, okay? Now, this is another one. Been destroyed. Another double bottom, right? You see where the target is, right above the 121, 122 area right there. And again, we go back on this one, and you start pulling these short-term moving averages, and you're like, wow, like these things are just destroyed. I mean, 60% down. Look at that. Ugh, my goodness, broke these. And a lot of them have broke these major trend lines that go back like years. And so that's never a good thing. And you can see when they break them, usually it's like a waterfall effect sometimes. Snow just reported earnings. Again, this one right here, double bottom as well. This is another high flyer that can really move. But when you look at the area, what do you see? That right there is an important level. It is that right there. You see that trend line? It hit it twice. That trend line goes back like 4 years. And so that's the area you don't want to break. You don't want to break that trend line right there. Not good if you do. You come over here and look at Lemonade. What is it in? In a bounce area. We talked about why these being in bounce areas. Still has to get through that trend line to the top. But why? Why is this area so important? Why does it fight it, right? It used to be resistance support. The IPO. See the IPO right there? Boom. Came down. Don't want to lose it. Wow, I mean, huge move up right there, by the way. I mean, it went from like 50 to 186. But when it lost that area, man, or got rejected from there, horrible. You're talking about 50, 60% down. So that's why it doesn't lose it. If it loses that area, yep, 3850 is the next area to be looking at. Okay, so this trend line right here, I need to move that. That's still going to be resistance if we make it all the way back there. Your next resistance area, you can see exactly where it's at. See that little shaded area I got right there? Between 58 and around 62. Like that's going to be your next resistance area for sure. Okay, so just pay close attention to that. You can see where resistance finally broke through. But if it breaks through, it's just another one. It'll rip your face off to the top and make you cry on the way down because it moves fast. Now we talked about this yesterday. This hit it and then sold down. But what happened today? It hit that trend line. It hit that moving average and it bounced. Okay, this is that Vanguard Emerging Markets ETF. I'm just in the camp where I'm like, I don't see how the S&P and the Qs ever get back on track if this much money is flowing into these ETFs. Okay, I don't know because there's so much. I'll show you the ETF inflows every week, and so they've been moving so hard and so fast. Everything takes a break eventually, and so I ain't saying it's got to go down or crash or nothing like that, but at least start trending sideways and start consolidating some, like you see to the left over here. I mean, God knows, to pull up the South Korean stock market, it looks like a crypto meme stock or something. I mean, it's just nuts. That's because of Samsung. But so again, if these go down, you would think some money would start flowing back into America again. Now, real quick on the data, we had a bunch come out this week. Not really too much. It was very light, so I wanted to kind of consolidate all in, right? So, Richmond Fed Manufacturing Index, -10 versus -5. This one's still in contraction. It couldn't get above that zero line. Everything was pretty terrible. The services index, though, is way more important because that's 70% of the economy. And so you see that at -10, was -6 prior. Revenues fell -8 to -3. Employment to 0 was +5. You see this is below 0. You don't want to see the services area like this. Manufacturing you don't mind so much, but not the services. This is Philly Fed Services Index fell to -17.3. This is below 0 as well. You can see all the numbers are pretty terrible. Even the prices paid rose +40.7 versus 34. Employment rose. That's good. 10.6 to 9.7. So that's a pretty good thing. Another thing to look out for is the unemployment claims did come in less than expected. Market always seems to somewhat like it, I guess. But again, until you start getting to 250, 300K, nobody cares. I mean, to be honest, it's not like the economy goes, oh my God, no. Nope. And you see the continuous, though, kind of just looks like it's trying to continue down. The one thing I find interesting is when I start reading about people trying to find jobs, and if you're one of these people, let me know. Like, it's taking longer. That's what I keep reading. Every report says that. And so I want to know what you're seeing, if you happen to get laid off, or you know somebody got laid off and they're looking for a job, like, what the deal is. Because remember, when it comes to unemployment rate and all these kind of data, if you tell them you just stop looking for a while, you're taking a break for like 30 days or 2 weeks or a day, and they say, oh, so you're not looking right now? No, you're not unemployed anymore. That's the way it works. You're not considered unemployed. You have no job and you plan on trying to get back in the workforce. You're not unemployed, okay? That's just the way they look at it. So keep that in mind when you look at these kind of numbers. Now, looking at earnings tomorrow, nothing big. I mean, I think a high flyer is going to be EF Energy Fuels right there. And then when it comes to data, we do have, we'll see how the market reacts to this, core PPI, and then PPI, headline PPI month over month, and Chicago PMI, construction spending, which I think everybody's going to look at because that's one thing that's really been contributing to the economy and stuff. But anyway, guys, please hit the like, subscribe button, especially that subscribe button. I really appreciate it, man. Trying to build those up. Think about signing up for the membership, left McDonald's combo. It's everything you get with it at $7.99 a month or $85 the whole year. Right there, just hit the first link in the bottom of the description below this video and you're good to go. And I'll see you guys Saturday. Don't forget to put your questions in the comments.